Let me give you the conclusion first. Last week, Citadel bought up huge chunks of SK Hynix and Micron stock, but exactly how much they paid? Nobody knows that. Not today, not ever, officially. It's buried under a confidentiality clause. And that one word, unknown, is the reason a lot of people chasing these semiconductor stocks right now have no idea how expensive their entry actually is. Citadel knows their discount. We don't. And yet we're buying at full market price today. Do you see what that means? If you understand this one video, you will never again react the same naive way when a headline says a big player just stepped in. Why does this video matter? Simple. Once you understand why Citadel hiding its purchase price is bad for you, you'll read every smart money bought the dip headline completely differently from now on. If you don't understand this, you'll keep chasing these stories after the fact, paying full price for something a bigger player already bought at a discount, without even knowing what that discount was. My name is Moon. I obsess over where money actually moves and just as much over what information never gets shown to us. If you've ever felt that anxiety of everyone says this is the bottom, but am I the one about to get caught at the top again, hit subscribe. And if this video helps, drop a like too. All right, here's what we're covering today. Where did the money actually move? Why nobody knows the real price of that trade? And why that matters. So what do we actually do, facing that information gap? What's the first mistake people make when they see this story? Citadel bought it, so the bottom is confirmed. I should buy in now, too. That's it. But here's the fatal hole in that logic. We know Citadel bought. We don't know at what price. And that's critical because not knowing the price means we literally can't verify whether this was actually a bottom signal at all. We're just trusting the media's interpretation of bought the dip. Here's the easy version. Your friend tells you, I got my used car for a steal yesterday, but they won't tell you how much they paid. You just hear steal and assume used car prices in general must be cheap right now, so you go pay full sticker price for the same model. You have no way of confirming whether your friend actually got a deal or just like saying that. The main character here is Leopold Aschenbrenner, a 24-year-old former OpenAI researcher. In 2024, he wrote a 165-page essay called Situational Awareness. It made him a Silicon Valley celebrity overnight, and he launched a fund with the same name that racked up over 1,000% in cumulative returns in 3 years. At its peak, the fund held about $45 billion in assets. But the secret behind those returns was leverage of almost 4 times. $1 of his own money controlled $4 of exposure. In July, AI bubble fears hit, and stocks like SK Hynix, Micron, and SanDisk dropped anywhere from 35 to 47%. At 4 times leverage, a drop of that size was enough to wipe out the entire principal. The fund's assets fell from $45 billion to under $10 billion, 2/3 gone in 3 weeks, and its 3 prime brokers, Goldman Sachs, JP Morgan, and Bank of America, all issued margin calls at once. On Thursday, July 30th, before markets even opened, the fund handed over roughly $16 billion of its entire public equity portfolio to Citadel in a single block trade. One of the largest emergency block trades in Wall Street history. That's everything we actually know. Now here's the part that matters. Here's the thing about block trades. By design, they happen off-exchange, directly between 2 parties wrapped in confidentiality clauses. So the exact price, the exact discount, is never officially disclosed. And here's what people really don't realize. This isn't the first time. Citadel absorbed distressed portfolios the same way after Amaranth Advisors collapsed in 2006 and Sowood Capital collapsed in 2007. And back then, too, the real discount stayed hidden for years, only surfacing later through lawsuits and industry estimates, roughly 30 to 50% below market. And here's where it gets genuinely interesting. This secrecy matters because it's living proof of information asymmetry. Citadel knows exactly what it paid, which means it knows exactly its break-even point and exactly how far the stock can fall before it starts losing money. We, buying at today's market price, have a break-even point of today's closing price. Same stock, completely different game. Let's run the numbers. Say, hypothetically, Citadel got a 40% discount. Even if SK Hynix drops another 20% from today's price, Citadel is still in profit territory. But someone who bought at today's market price is already underwater the moment that 20% drop happens. Same stock everyone's holding, but one side has a cushion and the other doesn't. To be clear, that 40% isn't a disclosed number. It's a hypothetical based on historical precedent. And here's why this hurts us specifically. This asymmetry manufactures false comfort across the whole market. Headlines say Citadel buys bottom signal. The real information hiding behind that headline, the actual price, never even gets mentioned. We're judging the outcome without knowing the cause. So you might be thinking right now, does that mean I should just ignore this kind of news entirely? No, the opposite. Treat the absence of information as a signal in itself. First, make it a rule. Someone big bought it is never, by itself, a reason to buy. A trade whose price you don't know is a reason to pay attention, not a reason to follow. Second, read the hidden discount as evidence that the risk is still real. If this deal had been uncomfortable even for Citadel, there'd be no reason to keep it secret. The more likely explanation is that it was a steep bargain. Steep enough that they'd rather nobody know. To be fair, that's my personal read on the pattern, not a confirmed fact. Third, personally, when a headline like this drops, I don't jump in immediately. I watch the actual price action for at least a few days, sometimes a few weeks. If it's a genuine bottom, the stock holds up without another leg down. If it was just headline-driven buying, you usually see another shakeout down the road. Again, that's my process, not a universal rule. Calibrate it to your own risk tolerance. At this point, you might push back. Still, Citadel absorbing that supply stopped a $3 trillion cascading sell-off across the market. Isn't that a solid, confirmed fact? You're right, it is. Stopping that systemic collapse is confirmed, and from a systemic risk standpoint, that's genuinely a positive signal. But the crash was stopped and the price is cheap. Right now are two completely different questions. The first one is a confirmed fact. The second one is a question nobody outside that room can actually answer, because the only people who know the answer signed a contract to stay quiet. So, let's wrap up. It's a fact that Citadel bought up huge blocks of SK Hynix and Micron. What's not a fact, and probably never will be officially disclosed, is what price they actually paid. That one missing number is exactly what separates us, buying at today's market price, from Citadel, who bought at a discount ahead of us. What matters isn't who bought it. What matters is the plain fact that we don't know the price. Once you internalize that, the next time a headline like this drops, instead of getting excited and chasing it, you'll pause and ask yourself, what am I not being shown right now? This is exactly the kind of story I dig up every week, where money actually moved and what part of the picture never gets shown to us. If this helped, subscribe and turn on notifications. And if you've got a friend who chases every "it's the bottom" headline, send them this video. It might just save their account. That's it for today. Let's protect what we've built and grow it from here.